Let's find some day trades and swing trades. Hello, traders. It is Monday, August 3rd. We're about 3.5 hours into trading. Thought I'd wait a little bit longer to do today's video. Not a lot going on in the market. Very, very tight trading range. You can see a lot of little candles here. Those are dojis. That means the market's really not going anywhere. We have sellers and buyers balanced right now. You can see that there was a nice little dip in here. We checked the opening price, the low of the day held. Then we got a nice little 1OP cross right in there. That's about as good as it got all day. Really nothing else happening. I think we're going to stay in this range for the rest of the day. The high will be in place. The low will be in place. We have some end of month, beginning of month fund buying. Had some economic news come out of China. They had their Caxton Purchasing Managers Index came out somewhere around 52.3. That was a good reading. However, China is not having the coronavirus issues that we're having. They've been able to contain it. They have much stricter rules and regulations regarding quarantining. And right now it's a problem for the U.S. because we have widespread coronavirus cases exploding in many instances. We have states that are in phase 3, some considering back to phase 2. And this recovery is taking much longer than expected. That's what's got me concerned. The $6 trillion stimulus package that we had back in May is running out, and we are not going to get a $6 trillion package this time. We're going to get something around the $1.3 trillion neighborhood, considerably less, yet the problem is as bad as it was back in April, May, perhaps in some instances even worse. The other issue that I have right now with the market is that, yes, tech stocks look fantastic. They have benefited to a large degree from coronavirus, and we saw that in the earnings that were reported last Thursday evening. We had Facebook and Apple both with solid revenue growth. Amazon, incredible revenue growth. Google, not so much. They actually posted a fairly soft number, but the jobs in the U.S. are not concentrated in the tech sector. And if you take a look at the workforce in restaurants alone, I was reading a report this morning that suggests that we could see as many as a third of restaurants failing in 2020 this year. Well, that's significant because the restaurant industry employs 8% of the workforce. It's huge. A third of the restaurants are going to fail. 8% of the workforce is in the restaurant business, and that accounts for 4% of our GDP. So that's just restaurants. Think about everything else. Think about transportation. Think about the hotel industry. Think about how many jobs there are across all the other sectors other than healthcare and tech, which really have been the two sectors that have led this rally higher. The other statistic I find interesting is that 10 stocks in the S&P 500 have rallied on average 35%. The other 490 stocks are down 10% on average this year. That tells you how concentrated this recovery has been. And I wish it were broad-based because then the jobs would return. I think that we're going to start to see some problems, especially if there's not an extension of the PPP. Employers are going to have to start laying off people, and I think we see that unemployment number go right back up. And we possibly could have some credit issues. So I hope that this doesn't happen, but I'm starting to see some warning signs. That's why I've advised swing traders to be in cash. Well, wait a minute, Pete. Can't swing traders buy puts? Can't we make money when the market goes down? You can, but you have to be so nimble and you have to be engaged with the market on an intraday basis, and then you'll know if you should hold overnight or not, because we are in a 10-year bull market run. We are in a 3-month bull market run. You do not start buying puts just because you think the market's going down. You have to have technical breaches. So technical support has to be breached. Personally, I'm watching for late day selling with follow through the next day. That will be a sign. And it's incredible to think that we are only about 50, 60 points from an all-time high in the S&P 500. Given that Q2 earnings were so weak, which incidentally, We've got over half the companies have reported now, and the scorecard is that revenues are down approximately 8% on average across the S&P 500, and earnings are down somewhere closer to 30%. So profits are down 30%, yet the market is within striking distance of the all-time high. It is factoring in a V-shaped recovery, and we're not getting it. I think that Q3 could be really, really soft. We won't know that for quite a while, but when I take a look at what's going on around me, all the businesses and consumption, the way that people have changed their behaviors, I see trouble ahead. I think that the upside to the market right now is very, very limited, but I think the downside risk is pretty elevated. So I like being on the sidelines from a swing trading basis. I'm going to make my money day trading. I'm going to stay engaged with the market. When the market does finally start to show some weakness, I'm going to see it as a day trader, and then I'll be able to decide if I want to hold those positions overnight. That's how I plan to make money over the course of the next few weeks. We have major economic releases coming up this week. ISM manufacturing came in this morning. 52.3 was a very good reading. That's a solid reading. Tends to be forward looking because it is a survey. We have ISM services coming out later this week. ADP on Wednesday will be very important. Unemployment report on Friday will also be important. But these are backwards looking numbers. The number that you really want to keep an eye on is initial jobless claims. And if you start seeing those tick up, they will show you what the trend is. So I've seen 2 weeks of increase in the initial jobless claims number. So that's of interest to me. I'm watching it very closely. Chances are politicians will get a deal done and then they will flee DC and they'll go take their vacations, and there won't be anyone minding the shop while the coronavirus increases and the protests continue and everybody wonders what the state of the economic recovery will be. So I think that investors start to get very nervous now that megacap tech has released, and we start getting into the back half of earnings season where you do start hearing from some of the softer groups and sectors. Right now, we don't buy puts, we day trade. These are the dog days of summer. We'll have one more decent week left because this is a heavy week of earnings, plus we got the economic releases. But after this Friday, boy, I think things are really going to come to a grinding halt. I hope I'm wrong, but that is typical for this time of year. So I'm just going to go in. I'm going to find a couple searches. I'll show you some stocks that I like. Again, I wouldn't be doing anything swing trading wise. I wouldn't really be holding overnight. I think that the downside risk is pretty stiff. If you're super nimble, you can hold some of these stocks overnight. And I'm going to go right into my pop bull search. That's where we're going to start. Market gapped higher. Was able to hold the gap. Tested it once. No problem. We're not going to have a gap reversal today. So the market should be able to maintain this range. Go into the daily chart. Here you can see that we've broken out through that horizontal resistance level, but you can also see these tiny bodied candles here. We're not going anywhere fast. I like drawing this upward sloping trend line. This is my first line of support. That would also be right in that horizontal support level around the 320 level. If 320 support is violated on a long red candle closing on its low and I see follow through the next day, I will start trying some shorts. But until then, we have to focus on the long side. So let's find some good longs. FSLY, this is the pop bull search. FSLY, really nice rally right out of the gate. Been able to maintain those gains on a daily chart. You can see a breakout through horizontal resistance to a new high. I like it. It looks good. Here's probably my favorite of the day, CHWY. Love that compression and that horizontal breakout right there. Gap up. Here's the first sign. Close on the high of the day. Beautiful. Gap up. Held that gap. Didn't even close it. And it challenged resistance immediately, closing on the high of the day today. Opened. Gapped higher. It's on the high of the day. Fantastic relative strength. And if I go into a 15-minute chart or a 5-minute chart, you can see that strength is continuing. This stock is grinding higher. Piton, PTO what? Look at that. Beautiful. Breakout, new relative high. Go to the daily. excellent horizontal breakout to a new high. SQ, same thing. Beautiful, beautiful chart. Nice breakout. Those are 4 stocks that I think you can watch: FSLY, CHWY, PTON, SQ, all on good volume, all having breakouts to new relative highs. I like them. So easy to find. All I had to do was to go into Pop Bull. Those are my candidates. That's all I've got for you today. If you like this content, please give it a thumbs up. Make sure to subscribe to my YouTube channel and turn on your notifications so that you don't miss any of these videos. I promise you, I'll always have some great trade ideas in there for you. And also, check out my Twitter feed. This morning I posted CHWY about 45 minutes after the open. It's easier for me to just post an annotated chart there than it is to do a video. So follow me on Twitter and you'll be able to get some early stock picks along with my early morning market analysis. Thanks so much. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.